Mr. Khan, currently there is a lot of volatility in the global stock markets. What is causing this uncertainty?
Sure, there are several reasons, and actually most of them are originating out of the United States. So U.S. monetary policy, U.S. Foreign policy as well is creating some turbulence. So the primary driver has to be monetary policy. It's the Federal Reserve Bank reversing course, moving away from loose monetary policy towards what they think is normal, or towards a normalization of policy.
So what would you say? Are we already in a bear market?
No, we're not in a bear market. The bear market necessitates a very different economic backdrop. The economic backdrop in the key major economies of the world it's still a constructive outlook. The U.S. economic data is still constructive. Chinese data is still constructive. Japanese data is still constructive. These key economies, as long as they're holding well and performing well, that doesn't really paint the right picture for a bear market situation.
You already mentioned the US Fed Reserve in the first question. This is one important factor. How many hikes can we expect, let's say, until 2019 or the end of 2019?
Sure, we're looking for a 25 basis point hike in December. We're looking for a 25 basis point hike in March and one in June of next year. So in total, 3 more to go from our perspective.
The important question, of course, is how does this affect the stock market or the US economy?
Sure, it should affect the U.S. economy by creating some headwind, meaning some resistance to growth. What the Federal Reserve Bank clearly is concerned about is inflation moving a little bit too faster than they want, but they're also concerned about bringing policy to a place where they can respond if the economy turns down. And this is really critically important to understand, that the Federal Reserve Bank is moving policy for a variety of reasons. One is exactly that policy they need to have policy ammunition when they will eventually need it, perhaps in 2020. Whereas ECB, for example, doesn't seem to have the room yet to move policy. And if the economy turns down in Europe, the ECB will have to loosen policy on top of an already loose policy. So the ECB is in a very precarious position.
You already mentioned 2020. Does that mean we're going to have a US recession then?
No, we're not looking for a U.S. recession. We are looking for a slowdown in 2020. So by the end of 2019, the economy should be a little bit slower. 2020, the economy is expected to slow further for a variety of reasons. One, the monetary policy is going to act as a headwind. But two, the fiscal policy, the tax policy, specifically the tax policy, the tailwind from the tax policy should be fading by then as well.
If you look at Europe, we still have this, say, ultra low interest rate environment. What do you think? When will the ECB and also the Swiss National Bank make their first move?
Well, the ECB has kind of stated when they will be ready to move. It's going to be late in 2019. So they've kind of, to some extent, tied their hands till then. The SNB, the central bank here in Switzerland, is not ready to respond either till the ECB moves, most likely. So we're talking about late 2019 before either one of these banks may be able to move.
So is there a chance that the Swiss National Bank is going to make the move even before the ECB?
It's unlikely.
Yeah. So, but what does it mean for investors? We have this environment, special environment with low interest rate in Europe, with this high interest rate in America. How should they be positioning themselves in this environment?
The environment is challenging. Markets are going through some stress, as you mentioned in the beginning. The right thing to do is try to ascertain what time horizon is really your time horizon and position accordingly. So we like some investment thematics that we believe are thematics that our investors should have in their portfolio. So you have to become a bit more specific with regards to what the opportunities are, and not look at broad market trends, but look at specific ideas in the marketplace.
Is there some specific ideas that you favor right now?
Sure, we really like the technology space. I know some of the big tech names have come down. We're not really looking at those big tech names. We're looking at specific niche technology-driven ideas, and they include the fintech space. They include the medical field and the technology field merging. So the technology opportunities in medical, and we're also very keen on the electric space, the electric automobile space.
And if you look at the regions like US, Europe, or Asia, what do you prefer?
We prefer U.S. Because policy response has been very sharp and very strong on the way down when the economy was moving lower. The Federal Reserve Bank moved very quickly, very aggressively, and similarly now they're adjusting. So that's a very big vote of confidence to the U.S. policy makers, both at the central bank side and also at the fiscal policy side, because there has been a very strong fiscal policy response. Other areas have not really responded so we like the U.S.